Hello everyone, thanks for joining us this morning and welcome to this educational presentation of 3 powerful techniques to help maximize your trading. Now, in my opinion, these are 3 of the best products that we have at Specialist Trading to educate you, and we've put them all together to really maximize your trading in order to take it to the next level. For example, let me share with you this chart example in TSS. Now, as I always say, someone looking at this the way we're usually taught to look at a chart or to analyze any type of trade before we get in is by using things that we've been taught but really hold no consistency. For example, most people would look at this and say, well, Steve, there's major resistance right here. You see, we can't get through this level. That's where all the institutions want to sell, or that's where all the pressure is. So I'm going to wait for a breakout, or I'm not even going to do anything. Maybe I'll even look to short this stock. Well, with this triple threat today, with these 3 techniques I'm going to be sharing with you, which are actually generating signals on their own, you would have seen 3 signals were actually generated even when the so-called resistance was in place. Now, the third of these techniques actually filters out the best setups. For example, these first 2 setups really didn't produce much. In fact, had you gone long, you may have even been stopped out. So this third technique would have actually filtered out those 2 buy signals and kept you in and only in this last one. And you would have been wise to actually take this signal because 2 days later, the stock gapped up and then it went up 28 points higher coming into the first week of June. So these 3 techniques can really elevate your trading to the next level. Now, someone could say, well, Steve, I'm not really skilled at looking at a lot of technical information. On top of that, I haven't been trading that long. I don't really have a degree in economics, and on top of that, I don't have a lot of experience. Well, that's why Pro Trader Strategies and myself developed the PTS Primo charting platform. This is the educational platform that actually teaches you how to maximize your trading by making it as simple as possible. So welcome once again. This is going to be a great educational presentation. My name is Steven Primo. I'm the president and founder of Specialist Trading. And if you're new to my webinars, we are all about educating you. That's our only goal, just simply to educate you, because most traders, when they feel they don't have enough experience or education, what do? Well, they rely on a so-called guru or some system that's supposed to never fail. And really, when you do that, you're joining the ranks of roughly 85% of all traders who ultimately fail. That's my opinion why I think most traders fail, because you've taken yourself out of the game. But once you're educated, once you feel confident to make your own trading decisions based off your comfort level and your own risk parameters, that's when you start to become consistent. Now, I've been trading for 42 years now, and I was taught this exact same way 42 years when I was on the floor of the Pacific Stock Exchange. And I think this is the cornerstone to enable me to be able to trade for that amount of time. So that's why I've devoted my career now to educating traders so that they can roughly be trading not just for a couple of good years, but 20, 30, hopefully 40 years down the road. And this is what we're going to explain to you today. But before we begin, we're first required by law to share this with you. So once again, please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these 3 techniques in action. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples I'm about to share with you are strictly for educational purposes only. Now, as I always say every week when we have an educational presentation, I invite each and every one of you to follow us on Twitter. And I know a lot of you have done so already, but there are a lot of people that like to go on Twitter to find out what to do or what to trade or what to buy or sell. And we post a lot of mainly educational information. But let me just highlight some of the things, if you haven't done so already, some of the things that we've tweeted in the last couple of months. For example, I tweeted, this was in May, attention all traders, on today's close, a number of our proprietary methods have generated sell signals in most of the major market indices. Now, we'll keep members posted as to whether or not they are triggered. And please remember that all signals are strictly for educational purposes only. Now, this was tweeted after the close, Pacific Standard Time, 1:26 on May 1st. So if we take a look here at the spiders, that's the ETF that represents the S&P 500 index, we'll see here that I tweeted at the end of this day. Now, if you're a student of mine, you'll see that there are a number of setups and indications here telling you that we may have some trouble at this point. Now, this was on May 1st, and we all know what happened after that. The market fell more than 1,700 points. Now, this was after the fact, after something we tweeted. For educational purposes. Now, this is something, if we want to go back a little bit further, I had a Bitcoin tweet where I said, is it time to get back in? Strategy number 4, one of our most prominent strategies, has already generated 3 buy signals while in the proprietary fluid buy zone. So contact Pro Trader Strategies for more info and discounts on these products. Remember, all these signals are for members, educational purposes only. This was tweeted March 27th at 7:35 a.m. Pacific Standard Time. So this is when I tweeted, because we had seen a series of buy signals being generated when the stock was basically doing nothing, or I should say the Bitcoin product was basically doing nothing. And we all know Bitcoin in the past 3 months has continued to rise and rise and rise. So there's a lot of great free information to follow us on Twitter. Now, remember, we are not generating and giving you signals in which to buy or sell. We're simply educating you, because these are all for educational purposes only. So once again, as I just stated, we are first and foremost an educational company. My goal is not to force feed you signals. My goal is not to tell you what to buy or sell or what time frame. And I can't tell you how many prospective members' emails I get or questions saying, Steve, if your stuff is so good, what's the best time frame to trade for this market? Or what's the best stock? Or what's the best future to trade? And that's not what we do here. In fact, if that's what you're looking for, you've come to the wrong place. What we want to do is provide you with the information so that you'll actually never have to ask those questions again. The one question we always tell our new students is you should never ask, what do you think of the market? Because that's basically what you're telling the markets and yourself, is that I don't know what's going to happen or what to do. I don't know what the market wants to do. So I'll ask you, because you must have better information and better knowledge than I do. And that's why most traders fail. What we want to do is give you enough information and insight so that you can really have a good feel for what the market is doing. So you'll never have to ask that. You should never ask anyone what you think of a certain market or what you think of a certain stock or a future. You should have a great, clear idea as to what you think it's going to do based off of the knowledge we give you. This is the specialist edge. This is the edge I was taught with and what has sustained my trading for 4 decades, and hopefully it will do the same for you. Now, since this is going to be an educational class, I want to take each and every one of your questions, as always, but I think I counted before we came on here, close to 170 slides in today's presentation. That's a lot. If we stop for a minute for each and every one of these, we'll be over here over 2 hours. I don't want to take that much time. So please, if you have a question, please wait till the end of today's class. I promise I'll get to each and every one of them, but we have to wait till the end, okay? Many times if you wait for the next slide, your question will be answered. The one question I will answer is the most common, and that is this being recorded today? Yes, it is. So if you have to leave early, you're having technical issues, don't worry. I'll forward each and every one of you a link to this recording at the end of today's presentation, okay? All right, so let's begin now. Let's talk about these 3 techniques. Let's talk about technique number 1. Now, you've heard about me speak about this before. It's probably our most powerful strategy we have at Specialist Trading. In fact, I just showed you a couple of examples of it in the tweets, the charts I share with you. But this is strategy number 4. This is the first strategy I was taught by my mentor some 4 decades ago, and I continue to use it in some capacity on a daily basis. So let me give you some of the highlights. It's designed for traders looking to catch momentum. The way it's based is off a pattern recognition. So there is a specific pattern that happens over and over again in any market, in any time frame, and in any direction. So we're looking to recognize and identify this pattern. All right? It only uses one indicator, and that's the 50-period simple moving average. That's how simple this particular method is. Now let me share with you some older charts just to give you an insight into how this works. Here's an example in INTC. As we see here, a buy setup was generated, and the stock immediately went up based off of this pattern. This can work on the downside. Here's an older chart of Apple. A sell setup was generated based off this pattern, and as you can see, it was down in the next couple of weeks or next month or so. Or in GM, as we see here, there were 2 buy signals generated. This is what we call a cluster of buy signals, and the stock took off, okay? So that's our first technique we want to share with you. Our second technique is an entirely different strategy based off entirely different rules, but just as simple as strategy number 5. Now, here are some of the highlights of this particular technique. It's a non-traditional candlestick method. In other words, we're looking at candlesticks, but an entirely different way. Now, the beauty of this is that it may be applied to all candlestick patterns. So even though we focus on a particular one, it can be applied to virtually any candlestick pattern. Once again, only uses one indicator, the 50-period simple moving average. But just like strategy 4, we can apply it to all markets, all time frames, and in all directions. Now, let me share with you some older examples of strategy number 5, okay? Letter O, as you can see here, it's different. We're looking to catch momentum in strategy number 4, but in strategy number 5, many times you'll see a buy signal generated where you think it may have already gone up too high, but it'll continue to generate it. And if the trend is strong enough, you'll see more and more strategy number 5 signals generated along the way up. It can also generate sell signals. It looks like it generated a top right here in CTL, and look how the market fell out of bed after that. Once again, if the trend is strong enough, you'll see more signals generated all the way down. Now here's another cluster of buy signals in Facebook, an older chart in Facebook, and we all know what happened after that. The stock took off. Just like we said before, in a very strong trend, you'll see a lot more of these buy signals with strategy number 5 being generated all the way up. Now, one thing we have to tell you, because our methods are very consistent, but losses are inevitable. All right, you will always have losses. If you ever go to a webinar, or if you ever buy a system or a method and they tell you this thing never loses, I would run right off the bat because I still trade. In fact, let me tell you an example. Yesterday I was trading the E-minis and I immediately lost $400 on a trade, okay? And so today, this morning, I immediately made $500 based off the same setup and the same strategy and the same way I trade. But that's what we mean by consistent. You want to have something that's able to recoup those losses. So losses are inevitable and they're acceptable. There's nothing wrong with them. For example, here's a strategy number 5 buy signal. All right, the stock has been coming down. It looks like it's a nice place to buy, and we immediately go lower to make new lows. That was strategy number 5. Here's a strategy number 4, sell signal. This looks like it would be a perfect place to sell after this nice run up, and it immediately goes up and makes new highs. So while losses are inevitable, there is still a way to filter many of them out. This is the third product in the triple threat we're talking about. And this is technique number 3, the PET D. Another one of our most powerful methods that we have at Specialist Trading, something I was introduced to on the floor. I talk about it a lot because it is so powerful, one of our most popular products we also have at Specialist Trading and Pro Trader Strategies. But for those of you who are not familiar with the PET D, what exactly is it? Well, the PET D is a proprietary algorithm. When I was first introduced to it some 4 decades ago, we called it the formula because it was a simple formula that you had to calculate, but you had to calculate it on every bar. Now, this is okay if you trade daily or weekly bars, but on the floor, we were trading 1-minute and 5-minute bars. And it was very cumbersome to try to do this. So we made it a proprietary algorithm where we actually identified it for you and took all the hard work out of it for you. Now, this is a short-term trend identifier, all right? The way we identify the short-term trend is by designating it into a color bar tool. This is where we've taken the hard work out of it for you. There is nothing you have to calculate. There's no formula that you have to generate or figure out on a tick-by-tick basis. It's all done for you. Let me show what I mean here. In this older chart of Aetna, we see here that we have a nice uptrend in place. And I'm sure that just when you think it's time to get into the uptrend, this happens, right? How many have seen this happen in your own trading? Well, what if there was a way to find out well in advance, like back here, that we're in an uptrend, and well in advance, not at the top, but at least well in advance before we lose everything, that we're now in a downtrend? Well, there is. It's the PET D color bar tool. As you can see here, when you have a series of green bars, 3 to 5 bars, such as we have right here, well, you automatically know you're in an uptrend. So you would have known well in advance as opposed to somewhere up here. And you would have also known well in advance to get out as opposed to finding out down here when everything went the opposite direction. So what is in my opinion, one of the most I would say consistent ways to use the PET D? Well, that's as a signal confirmation tool. Okay, we want to confirm our signals because this is a way it will filter out some of those losses. So here is the formula we use for this these 3 techniques. We're only going to trade strategy number 4 and number 5 buy signals that are colored green. All right, that's it. So remember when we showed you the up and down red or green arrows, well, that bar has to coincide with the arrow color. In other words, if you have an up green arrow, then the bar has to be colored or outlined green by the PET D, or else we won't take it. Now, conversely, if there's a sell signal, all right, say strategy number 4 or strategy number 5 gives us a sell signal. Well, the PET D must color that same bar red. It must either outline it or color it in red. That's the verification that we have a high probability setup. Now, when we combine all these, you're going to see how well it can filter out some of these losses and keep you in the good trades. Remember, we had a buy signal here in ZTS, and it went straight down after we bought. Well, let's add the PET D. Now, in order for us to take this, it would have had to have been outlined green. Because it's an up day, it's got a white or empty body, okay? But what's the outline? It's outlined red. So therefore, you would have never taken it, and you filtered out the trade. So there's no loss there at all. How about this strategy number 4, sell signal in letter M, okay? The minute you would have sold it, it went straight up. What if we added the PET D to confirm it? Well, remember, in order to take a sell signal, regardless of the strategy 4 or 5, that bar needed to be colored red. So let's see what it was colored. Green. So did we take this setup? Absolutely not. You never took it, and you never lost any money. So when we combine these 3 methods all together, strategy number 4, strategy number 5, which have high levels of consistency, but then when we combine them with the PET D, which can filter out some of those losses, we have a real synergy for success. We call this our triple threat of trading. These are the 3 techniques that can really help maximize your trading. These are the 3 things that I concentrate in my own personal trading, and they really help you to become a consistent trader. Now, we've just shared with you some older charts just for educational purposes. Let's share with you some more recent examples from last month coming into this month and show you how well this triple threat could have helped your trading, okay? Now, just for clarification purposes, the strategy number 4 signals will be designated with an arrow, okay? The strategy number 5 signals will be generated and be designated with a triangle. That's the way you know the difference in this educational webinar. All right, so let's look at Casey, C-A-S-Y. All right, once again, how is this viewed by 99.9% of most traders, myself included? When I first started out, this is the way I was taught. I was taught the same way most of you have been taught. We look at this and we say, well, I mean, we're in a range market. I mean, why would I want to get involved in a rangy market? I may be stuck there, you know, for weeks or months without anything happening. And maybe when I buy it, it'll go straight down and I'll get stopped out. And then it'll go back up the way you see here, and then I'll get back in and get stopped out again. These are the markets you want to avoid because they're not giving you any information, all right? Once again, sound familiar? This is the way I was taught. This is the way I was told. Stay away from them. You're not going to make good money. The market doesn't want to do anything, right? Well, strategy number 4 and strategy number 5, don't listen to those things. They're based off of candlestick patterns and a very high probability pattern. So as we see here, there were 2 signals generated. One was a strategy number 4, sell signal with the red arrow. Another one was a strategy number 5, buy signal with a green triangle. So now right there, someone would say, well, which one do I take? If I'm going to follow you, Steve, and I'm going to be one of your students, how do I know which one of these to take? I mean, most likely I'm going to lose on both of them, right? Because we're just going to be in a whipsaw range. Well, although nothing is guaranteed, we can have a higher probability of consistency by applying these strategies and then by applying the 3rd technique, which is the PET D. So once you see these signals automatically being generated on our platform, what you would do is click on the PET D tab up here at the very top, strategy tab, and you can see there's all our strategies here, strategy 4, strategy 5, and the colors would change. Now remember, if we're going to sell, if we're going to take this signal, a sell signal must be colored red. What color is this bar? It's colored green. So that means we do not take it. Now, the very next signal is a buy signal. That means it should be colored or outlined green. And yes, it is. So that means we'll take the signal, and guess what? 3 days later, the stock gapped up and continued to go higher into the 2nd week, 3rd week of June for 20 points. Okay? This just happened just about 3 weeks ago, or 2 weeks ago. Let's look at Intel. All right? The same exact example here. Now, we've been going higher, and we've got a buy signal, accompanied by a sell signal. Now, the buy signal, sure, went up for one day and then immediately went down. Let's see if the pet D could have helped us at least filter that out, or maybe keep us out of both, or maybe have us in both. All right. Remember, consistency is all about not having someone tell you that you never fail. Consistency is about a method, as I said in my own trading, where I lost yesterday and made it back today. You want to have the confidence that your method will be able to recoup what you lost sooner than later. So as we see here, we add the pet D, and in order for this to be a valid buy signal, it must be colored green, outlined green, because it's an up day. It's a hollow body. In order for this to be a valid sell signal, it must be filled in red, because it's a down day. So let's see what happened. Well, they're both valid. It was outlined green for the buy and sell. So had you taken this first, you most likely would have been stopped out. Let's say you lost a point, okay? Roughly. Let's say you used a very conservative stop placement. If you want to say you lost 3 points, that's great. Well, let's say you lost 1 to 3 points, anywhere within there, all right? But the beauty of these methods is, as I said earlier, you have to stay in because the very next setup may be the one that recoups that loss. So if you lost anywhere from 1 to 3 points and you still got into this one to go short, you could have recouped that in the next month coming into June, 7 points. So if you lost 3, if you lost 5 points on that first trade, you still would have had the potential to make it back. That's what we mean by consistency. All right, TSS. All right, this is the example we shared at the very beginning of the presentation. We have 3 signals in this kind of sideways market, okay? The first couple of signals, if you had a very tight stop, you most likely would have been stopped out. If you had a very wide stop, if you had a lot more money in your account, maybe you're still in the trade, all right? And we have one more. So the first 2 were strategy 4 signals because they're arrows. The last one was a strategy 5 signal because it's a triangle. Which one should we have taken? Simply add the pet D, and in order for us to take these, they should have been outlined green. What color are they outlined? Obviously red, so we didn't take these 2 signals. Now we have a strategy 5, which is outlined green, so we're going to take this trade. And that's where we had the potential to capture 28 points. This is how simple it is when you use this triple threat. And we make it extremely simple because trust me, when I was first learning these techniques, decades ago, I had to do all this by hand. And it was very difficult and cumbersome every night to look over hundreds and hundreds, if not 1,000 stocks every night. But all this is automated and it's so easy for you. Now we teach you everything. You're not just blindly taking trades because that goes against our entire philosophy. We want you to know why. We want you to be in charge of your own trading. But once you are able to check your work, excuse me, it makes it so much more simpler and you feel that much more confident because you totally understand why you didn't take a setup. Here are some more examples in play. Okay, we have a buy setup, which actually didn't work very well. And then we have 2 sell setups, okay? Which ones should we have taken? Well, we apply the third technique in our triple threat, and that's the pet D. This buy signal should have been colored or outlined green. It wasn't. It was outlined red. So the pet D, the short-term trend identifier, was saying, even though this pattern has been identified and recognized, it's not valid with the short-term trend. So we're not going to take that setup. But these last 2 setups, which are sell signals, one was a strategy 5 and one was a strategy 4, are telling us it's okay to take either one of these. And look what happened. 3 or 4 days later, there was a gap to the downside. Now, did we have any idea the stock was going to gap down like that? Absolutely not. But the market was telling us, based off patterns, based off candlestick recognition, but not using conventional wisdom, but using it in an entirely different way, we were able to be in sync with the market. Remember, we have no idea how high or how low something will go. And we really don't care. All we want to do is be in sync with what the market wants to do. Because isn't that what trading is all about? If the market wants to go up, we want to be a buyer. If the market wants to go down, we want to be a seller. It's as simple as that. You don't have to overcomplicate anything. Let's look at GH, okay? We have 2 signals here. This one worked out okay, and actually if you'd stayed in, you'd be still in the trade most likely, but nothing much has happened, and this one just generated a buy signal, strategy 5 and strategy 4. Once we add the pet D, we see that they were both valid. This one was outlined green, and so was this one. So you could have taken either one of these setups, 17 points, coming into a couple of weeks ago in June. These all happened within the last couple of weeks or so. Here's one in Tesla, okay? This was in the middle of May, all right? As we see here, a sell signal. We have actually a double sell signal. This is a very high probability setup because you have two signals generated off entirely different requirements. One was a strategy number 4 sell signal with the red arrow. The other one was a strategy number 5 sell signal with the downward triangle. So this is high probability, but we still want to make ourselves feel comfortable by confirming it with the PET D. So let's add the PET D to see if it was colored red. Yes, it was. Now, we don't care what the prior bars were. Even though these were colored red, it would be okay if they were all colored green. We really don't care. All we care about is the setup bar. That's the bar that's underneath the arrow. And if that's confirmed, that's all we need to know. 70 points in Tesla, okay, coming into June, coming into about 3 weeks ago. All right? So there's no reason, if you don't want to follow fundamental news, to follow, my God, institutions. I was following institutions 4 decades ago, and they didn't help me then, so I don't know why anyone would be caring about or interested in what the institutions are doing. Most of the time I dealt with them, they were wrong. And so my mentor said, Steve, and these were specialists themselves who have been trading about 40 years each. They said, Steve, why are you focusing on things that show and display absolutely no signs of consistency? It's easier just to listen to what the market wants to do. Why listen to institutions? Why listen to so-called trading gurus? Why listen to volume and fundamental news if you don't have to? Why not just listen to the market? So that's all I've been doing for the last 42 years, and that's what's enabled me to still be here, by only listening to the market. I stopped looking at fundamental news. I stopped listening to the institutions. I stopped following trading gurus over 4 decades ago, and I think that's a big part of my success. As we look at BMA, okay, we see here that we have kind of a sideways market, and we have a buy signal generated, strategy number 4, and it's colored green. Now, even though the majority of these bars are green, that's okay. Makes no difference. All we are concerned about is the bar above the buy arrow. 20 points coming into June 12th. Now the spiders, that's the ETF once again that represents the S&P 500. A lot of traders like to trade the spiders, but one of the best ways we tell students is that if you don't want to trade the spiders, you don't have to, but you can use them as a market directional tool. In other words, if a buy or sell signal is generated in the spiders or the QQQs or the diamonds, well, don't you think that the market's going to follow suit? So in other words, if you get a buy or sell signal in the spiders, in this case, it would most likely be a sell signal because it looks like we're absolutely doing nothing and just in a range market. But we had a buy signal generated, 2 buy signals, and a sell signal. So we tell yourself, what do we do here? What do we do? Do we buy? If we had bought here, we most likely would have had a big loss, but then it went up after we got stopped out. So I'm not sure if I want to take this trade. Well, let's add our third tool in the triad, which is the PET D. In order to take these buys, you would have had to have both these bars colored green. And you see they're both outlined red, even though they're up days. That's why they're hollow bodies. The back of them is white. Their outline is red. That just means that they're up days in a downward trend. So these are opportunities to either sell or, in our case, we had buy signals. We're just not going to take them. So as I said earlier, most likely you would be selling. So let's say you want to use this as a market directional tool, and you're not actually trading the spiders, but if strategy number 4 generated a sell signal, and it was confirmed by the PET D, most likely that means that the market's going to go down. So maybe if you were thinking of buying these options in a particular stock, or maybe you were going to buy these calls, or maybe you were long a stock already, you just got in and you're thinking, wow, I'm not sure I want to be in this. This is giving you a heads up as to the direction of the market. And as we see here, the market coming into the beginning of June fell 12 points. The S&P 500 would have represented that in hundreds of points to the downside. Now let's look at Google here. This is where students say, boy, Steve, when you get something like this, you have a really nice run up, then a gap down. I mean, it's really tough. Well, sure, it is tough. Whenever you have, gaps like this, or maybe it's based off news or something fundamental. Sure, but remember, even though the market may look as if it's, just very scattered, doesn't know which direction it wants to go, there are always signals being generated. As you can see here, there was a buy signal in strategy 4 and in strategy 5. Had you taken the very first one, you had 72 potential points to capture. And then once the trend changed to the downside, Well, you had a buy signal generated here. It wasn't confirmed, so you never would have taken it. And then you had two sell signals, a strategy 4 and a strategy 5. That would have potentially been able to capture 135 points to the downside. So the market is always giving you chances, regardless of what direction it wants to go. And it's up to you to decide to trade. But we're really furnishing you and educating you with really high probability setups here. Now, I know a lot of you will say, well, what about other time frames? I like to trade intraday, or I like to trade swing trading. Okay, let's look at a weekly chart of Roku, ROKU. Once again, it doesn't look like this is doing anything, but a buy signal was generated right here in the end of April. This is a weekly chart. So nothing changes because we're going to a different time frame. We apply the PET D, and yes, a strategy number 4 weekly bar is outlined green. So that would give you the confidence to take this trade if you're a swing trader. 42 points coming into the first or second week of June. How about if you're an intraday trader? Okay, let's say you're trading PSA on a 30-minute time frame. Expensive stock, but it should have some nice volatility, give you the option to make some some nice good trades, or if you want to hold overnight, maybe some options you want to trade in it. But the point is, looking in hindsight, we have a really strong move to the downside on this 30-minute chart. Okay, this was June, as you can see here, June 18th coming into June 19th. So just this past week. Okay, how could we have taken advantage of this in hindsight? Well, we add the strategies that we taught you, and we had a sell signal, strategy number 5 sell signal, a strategy 4 buy, and a strategy 4 sell. All right, which one should we have taken? Because obviously this one would have resulted in a loss. Well, we had the PET D. The first sell signal was confirmed. You would not have taken the buy signal, and the second sell signal was confirmed. So you had the opportunity to make 6 quick points just intraday trading a stock. This is how simple this can really be. It makes no difference. Let's look at some other markets. Not everybody trades stocks. Let's look at the E-mini. Here's a 10-minute chart of the E-mini going back to June 19th. All right, this was last week. Once again, we had a really strong upward move. In hindsight, could this triple threat have helped us? Sure. Look at all the signals. We have strategy number 5 as well as strategy number 4 buy signals. But remember, in order to have that higher level of consistency, in order to maximize your trading, you want to add the PET D. That's the third part of the process. You simply add it, and all of these trades would have been confirmed with the PET D. Potentially, if you had taken the very first setup, that's 30 points. That's $1,500 potentially you could have captured per unit, per contract, in just a couple of days. That's a 10-minute chart of the E-mini futures. That was just last week. How about a 2-hour chart of the Australian dollar? If you're a currency pair trader, once again, looking back in hindsight, this was starting around June 11th, a couple of weeks ago. We had a really strong move to the downside. Someone saying, yeah, Steve, it's easy to go short in hindsight, but I would have liked to known somewhere up here to go short. Well, let's add our strategies. And you would have known well in advance, before the market even fell out of bed, you were getting sell signals, a strategy 5 sell signal and a strategy 4 sell signal. Now let's add the third factor in the 3 techniques. And each and every one of these would have been verified and colored green, giving you potentially the ability to capture 120 pips. That's over $1,000 per unit if you would have potentially captured that by staying in that long. Remember, it's your decision. We teach you all these entry points as well as confirming them. And on top of that, we also teach you exit points. We teach you stop placements. We teach you ways to stay in the trade, to track it. Ultimately, it's up to you to decide how you want to exit, how you want to place your stop. If you want to get out with a quick profit, or if you want to stay in as long as possible. Remember, as I stated in the opening statements, our job as an educator is simply to provide you with the tools and information so that you can ultimately make your own trading decisions. We don't want you going to some website, some chat room, and finding out what to buy or sell the next day. Don't want you, or don't really think it's the best in your best interest to listen to some guru say what he likes to buy or sell, or to follow some institution, because trust me, in 42 years, I've found that there's no consistency. The only consistency you'll find is in education that has stood the test of time and then allowing you to make your own decisions. Not me. If you want me to make your own decisions, once again, you've come to the wrong place. I don't do that. I let you make your own decisions by providing you with the education. And lastly, Bitcoin. All right, remember we told you how we tweeted in March how Bitcoin was showing some great signs for moving higher and that you should watch it if you're a Bitcoin trader. Well, look at all these signals that were generated. Strategy 4, strategy 5. Now, in order to take those with this product, you would have had to verify them with the PET D. So once we add the PET D, we see that each and every one of these buy signals was colored green. And we all know what Bitcoin has done in the last 2 months. It's gone almost straight up. And buy signals were continuing to be generated all along the way. All right, so let's recap before we go into the question and answer portion. Remember, the first technique is strategy number 4. It's a pattern recognition strategy. Remember, in our courses, we teach you all the rules. This is not a blind box system where you just simply buy or sell when there's an up or down arrow. We don't believe in that. We want you to know exactly why you're buying and why you're selling based off this proprietary pattern. The up and down arrows are simply furnished for education so that you can check your work to see if you're in line. Same thing with strategy number 5, the second technique. This is something that we don't want you to blindly take the setups. We teach you what this is based off of, a non-traditional candlestick pattern. And we teach you how to identify these on your own. Lastly, we tell you that not every signal is going to be a winner. We know that. That's okay. Nothing works 100% of the time. But there is a way to filter out some of these losing trades, and that's by applying the PET D. One of our most popular as well as powerful tools. It can be used dozens of ways. In my opinion, one of the best ways is as a signal confirmation tool. Now we know that this can get cumbersome. It can be if you're looking for all the patterns and then you're confirming with a PET D and then you're looking for all the exit points and entry points and stop placement. Well, trust me, we've made it simple. We've taken the hard work out of it for you by applying all this on our platform. This is Specialist Trading's triple threat of trading. So, before we go into question and answers, ask yourself honestly, do you think these 3 methods can help your trading for the remainder of the year? We're halfway through. Do you think they can really take your trading to the next level and help maximize it? Well, if you said yes to that, we have a great offer for you today. We're going to offer you our triple threat. This is our triple threat special of Strategy 4, Strategy 5, and the PET D tool. You're going to get instant course access with all these. You'll learn all the rules, all the entries, all the exits, all the stops. You'll get also with the PET D, it comes with 4 PET D trading techniques on top of that. So ways in which to trade the PET D. Now this includes all the add-ons. So if you want to use this for your particular platform, let's say you use TradeStation or Metastock, or you like to use Thinkorswim, we can give you the add-ons for that so that you can be applying them to those particular platforms. Now, we're going to throw in an extra bonus because we know there's a lot of information there. You're getting over 40 years of information. Sometimes it can be a little overwhelming, especially for new students. Not to worry, we're going to throw in 12 months of the PTS Primo charts where everything is one click away. So you don't have to worry about figuring everything out. Even though you have the information and you've studied and researched it, everything is one click away so that you can fully understand exactly how to apply it. Now, with the charts, obviously, you're going to get strategy number 4, strategy number 5, the PET D directional tool. You'll get our proprietary buy-sell line. This tells you the overall trend as opposed to the PET D short-term trend. But one of the best things on our platform is the strategy signal scanner. All right, you've heard me talk about it before. I'm really proud of this because it is just so simple to use. Once you click on strategy number 5 in the green tab, you'll see a drop-down menu like this appear. Just simply hit scan and this window appears. All right. Once you scan for the list of stocks, whichever list you're interested in, we provide you with just dozens of lists from all the different markets. You'll see a series of green and red horizontal bars. That simply means a buy signal or a sell signal in the corresponding stock. It's that easy. On top of that, it's not just stocks. You can scan for other markets. All right. If you like to trade, let's say the currency pairs. Here's one of the Canadian dollar that was scanned recently. That was a green. You can add the PET D. 2 buy signals, strategy number 5, and it went up 350 pips. Here's another example, a 10-minute chart of the E-mini futures. Once again, if you like to scan intraday, here was a sell signal, strategy number 5, 20 points to the downside. Here was another signal that was generated right after that as well. Now, 12 months of the PTS Primo charts cost close to $1,800 because we're throwing this in as an extra bonus. But in, the good faith and our spirit of good faith and not trying to overcharge you, we're going to absolutely not charge you anything. We're actually going to give you 12 months free to make trading really simple for you. So you're going to get all of that entirely free. Let's break down what this triple threat is then to close. You're going to get strategy number 4. And even though it says stock strategy, remember, you can apply it to anything. That usually costs close to $700. You're also going to get the candlestick strategy number 5. All right, that also costs close to $700. And then the Pet D tool, which can be used just dozens of ways, that costs close to $3,000. Okay, now throwing all those together, the individual trading courses, if you bought them without our special triple threat special today, it would cost you close to $4,400. And that's not even including the platform. If we include the platform, we're talking close to $6,100, $6,200. Okay, that's a lot of money. And we don't want or expect you to come up with that amount of money the way so many other websites do. It wouldn't be fair to us as educators to charge you that. So we're not going to charge you that at all. In fact, we're going to deduct that by over 50%. We're going to slash the prices of the strategies. We're only going to charge you for the Pet D. That's over a 50% discount. And we're also going to include payment plans. So if you still can't have the ability to come up with $29.95, you can construct a payment plan with Pro Trader Strategies. A small deposit, you can still be up and running with our triple threat. But this is for one day only, a very limited time, because there's so much information jam-packed here. We cannot have this going for long, so you must act very quickly. Remember, 2019 is half over. Think about your trading. Are you anywhere near where you want it to be at the beginning of the year? Are you anywhere near thinking, okay, I've got it figured out now? Most likely you're not, and that's okay. That's the way the majority of traders are experiencing right now. Are you going to wait another year, though, to become a consistent trader? Why not take advantage of this great offer and get back on board to help maximize your trading to the next level? Remember, this is our triple threat special, strategy 4, strategy 5, the Pet D tool, along with 1 year of the PTS Primo charting platform, which makes everything a click away. One thing I didn't mention on top of that, you're going to get educational correspondence with yours truly. You can email me whenever you have a question, something doesn't make sense, and I'll be right there to answer any question you may have. So here's how to take advantage of this. Contact Pro Trader Strategies. I designed the platform with them. They're in charge of all of my course pricing and discounts. These are the people that can really help you put this together. If you want to put together a payment plan, my suggestion would be to call them directly at area code 310-598-6677. Now, if you have any questions, now is the time to ask. I promise I would reserve the last 15 or 20 minutes for any questions. So now is the time to ask. And one last thing, I'm going to leave this information up here. That link you see at the very bottom is the link that will take you to the sign-up page or more information on this. But if you want to, if you're very interested in this great offer, or if you want to put together a payment plan, I would really strongly suggest calling up Pro Trader Strategies. They'd be happy to work with you. There's absolutely no obligation. Just because you call up, you're not obligated to buy anything. They would fill you in and tell you what it would require of you for a small deposit. And you can still be up and running as early as today. So I'll leave this information up here. And remember, if you have a question, just go to the question and answer box, and I'll open it up right now and see if there's any questions. Peter asks, do the strategies work for forex trading as in stock trading? Yes, Peter. I showed, maybe this question was asked prior to those slides, but we have tons of traders who love to use strategy 4 and strategy number 5 on our currency pair markets. Now, on top of that, we recently gave a college in the forex markets where I gave a 6-week course in trading the forex markets, and this was a live class over 6 weeks we had for students. And the main strategies we had in that college were strategy 4 and 5 for the students of that. So if we included those in a college strictly for currency pair traders, yes, they are great for this particular methods, this triple threat of action. So if you're a currency pair trader, it doesn't matter. Once again, some people are asking, well, is it better for intraday or dailies? Remember, you're ultimately going to make that decision, because the best time frame to trade is the one that makes you feel the most comfortable. So all I can tell you is that we have students that use our triple threat for weekly bars. We also have students that use it for tick bars. So it makes no difference. The only thing that makes a difference is which one makes you feel comfortable. For example, let's say that you want to be using the triple threat, and you've always been taught to trade stocks or futures intraday, okay, on 10-minute bar charts. Now, let's say if you're using this, you're getting a lot of signals being generated, okay? Now, even though the majority of those signals may be, very consistent, if it doesn't make you feel comfortable, if you're not comfortable taking a lot of signals, if you're the type of person that doesn't want to take more than maybe 1 or 2 trades a week, then you shouldn't be trading it on a 10-minute chart. Now, let's say you're the type of trader that likes a lot of action, that you can't get enough signals. You want to be in and out all the time. Well, then maybe a 10-minute chart is too slow for you. You might want to go to tick charts. So do you see, there is absolutely no right or wrong answer for the application of these techniques and methods. The only right or wrong is when you are trading out of sync with what makes you feel comfortable. Therefore, as we always say, it's up to you to decide. You are in complete charge of your trading, not us. So there, as I said earlier, I get emails all the time saying, Steve, what's the best market to trade? What's the best time frame? That's your choice, because what I trade may be totally uncomfortable for you, and vice versa. Okay, so we always tell our students, you should never mimic or trade the way another trader trades. That's a recipe for disaster. No two traders should ever trade alike. That's why we don't have a trading room. That's why we don't have a chat room. That's why we don't have a signal service, because that would present a crutch for you where you think you'd have to trade that way and take those signals. You have to be in charge. As I said in the beginning of this presentation, you have to be in charge of your own decision-making process. In my opinion, that's the only way one becomes a consistent trader. One more question. What platform can you apply this to? Well, if you don't want to use the PTS Primo charting platform, you can apply this to TradeStation, Metastock, Sierra Charts, Thinkorswim, MT4. There's a lot, NinjaTrader, there's a lot of different platforms, but once again, those are great questions for pro trader strategies, since they handle all the tech support and the questions about that and data feeds and everything for the platform. I would call them for more information concerning those, okay? So if you want to use this information, the PET-D and the Strategy 4 and 5 indicators on your platform, contact Pro Trader Strategies. They can give you a more detailed answer. But yeah, you can use it on a number of different platforms, not just the PTS Primo charting platform, okay? Okay, no more questions. So as we conclude then, I hope you got something out of this. We really want to make you a consistent trader, okay? I know a lot of you are struggling or having trouble. Trust me, I know what it's like. I've been there before. It's extremely discouraging, and you're wondering why you're wasting all your time and most especially your hard-earned money when you're just basically going nowhere, treading water or sinking in quicksand. I've been there. It's extremely frustrating. I was lucky enough to have 2 mentors teach me the exact same things that I'm trying to teach you. So hopefully I will be able to teach you these things so that you can be, not just having a good month or a good year, but a good decade or maybe a good 2 decades going down the road, okay? As we conclude, I just want you to take one last look at our disclaimer. Remember, if you have any questions, please do not hesitate to contact Pro Trader Strategies. Call them directly at area code 310-598-6677. There's absolutely no obligation. They would be happy to answer any question that you may have, or even put together a payment plan for you for the triple threat. But please remember, this is for a limited time only, so take advantage of this as quickly as possible. And once again, as you're taking one brief look at our disclaimer, I want to thank you so much for attending today. I hope you got something out of this, but most especially, I look forward to all of you becoming students of mine at Specialist Trading and Pro Trader Strategies. Thank you so much for taking time out of your Wednesday. I'll see you next time. Bye-bye.